Whether or not to raise the minimum wage can be a contentious political issue, but what about the economics of that? S&P has some new research on that. I'm joined now by Satyam Panday, who's Deputy U.S. Economist. Nice to see you and thank you for your time.
Thank you for having me, Rhonda.
Tell me a little bit about your findings that show that there are more pluses to increasing the federal minimum wage than negatives.
Sure. First of all, when we got into this research project, this sort of fits into our long-term drivers of growth, and we've been seeing some headwinds to growth in terms of inequality and productivity. So we decided, okay, let's look at the workforce and see, from the lenses of the low-income, wage earners, and we thought, why not just look at the minimum wage workers? And we found that if you look at the minimum wage workers who make up about 3.3% of your regular wages and salaried workers, you find that if you give them a little measured boost in their wages, they would actually have a stronger purchasing power going forward, and they would be actually not left behind by this recovery. And we also found that in the literature, there has been lots of evidence that there wouldn't be as much of a job loss situation that many have predicted.
Satyam, in your report, you actually mentioned a couple of publicly traded companies that have moved toward raising wages, whether that's Starbucks or McDonald's or a few other retailers. What have you found in terms of impact on corporate profitability?
So when we looked at the companies that we rate basically in the retail sector and the restaurant sector, it does affect their profitability because a lot of them, almost a third of their share of costs come in the labor wages. So it definitely affects them. But the question is, does it affect so much that it would lead to a rating action? The answer to that, in terms of moderate minimum wage increase, is no. And we've already seen, the Walmarts and the Targets. They've already increased their minimum wages. Last year we saw them increase to $9, and this year it has gone up to $10. And so far the evidence suggests that this is a sustainable move, from their front.
I guess also interesting is how the U.S. is lagging behind so many of the developed countries in terms of wages. What did you find there?
When we looked at the OECD countries, the 35 countries, and when you compare the U.S.'s minimum wage in relation to its median wage, the U.S. comes dead last. It's actually behind countries like Spain, Greece, and these are countries that generally tend to have lower productivity growth than the U.S. And yet we find ourselves, at least in our low-skilled workers, are having a much lower share of wage to the median.
Is there any ideal time in a business cycle or an economic cycle to see wages increase?
So evidence suggests that it's probably, if there's any good time to increase minimum wage, it's when the minimum wage is already at a very low level, like the one that we have right now. We're at about 36% of median wages. Back in 1968, it used to be at 55% at its peak. So right now, it's already at its lowest. And the second thing that we would see is when the economy is not in a recession or at the early stages of recovery. So we're not there either. The labor market has been doing rather, quite well, solid. We saw we've been seeing numbers coming out since 2014, rather, solid pace of labor market, growth. And we think that if there's any good time to give this boost in minimum wage, it probably is right now. Companies can actually stomach that extra cost better right now than any other time.
Satyam Panday of S&P, a very interesting report. Thanks for sharing the highlights with us.
Sure. Thank you for having me.
I'm Rhonda Schaffler for The Street.